It would be my view that if the economy unfolds between now and our September meeting, if it unfolds the way I expect, I would be in favor of announcing a plan at the September meeting and beginning tapering in October.
That was Dallas Fed President Robert Kaplan giving his thoughts on the central bank's eventual taper. His comments coming after this morning's CPI report helped the Dow and S&P 500 notch another set of record closes, sent the 10-year yield lower for the first time in 6 days. But where are rates heading next? Let's bring in Rob Slimer of RBC Wealth Management to chart it. Hey, Rob, nice to see you. What are you looking at?
Hello, Melissa. Well, let's start with the 10-year because it's so fascinating what's happened here. We had that initial bounce in 2021 back to, basically a 50% retracement of the decline that we had between 2019 and 2020. All the optimism was in cyclicals. Everyone was excited about rates going higher. And sure enough, the 10-year peaks out around 180, 177 or so. And now this decline that we've had, everybody's been focused on the 10. Economic growth is starting to slow down. People are concerned about that, trying to figure out what's happening with the 10-year. But it's almost textbook. It's retraced almost 50% of that initial bounce right back to that 113 level. And I think coming into the end of July and the beginning of August, we saw a very nice retest of that 113. Over the last couple of weeks, this looks like almost a classic intermediate term reversal from a technical standpoint. And rates basically came back to that 50-day moving average, which we can see on the shorter term chart. That's around 138. And then they stopped today. That's a fairly natural place from a technical standpoint that we'd expect rates to pause. But there's a lot of support around this 130 level. And I think that the upside is probably closer to 145 to 150. And that's, again, another 50% retracement of the decline we've just seen since February. And I think the implications for that is if we start looking at a lot of other areas of the market, notably the cyclicals, whether that's banks or transports or a long list of other cyclical indices, they've been tracking with the 10-year lower. And many of them have come right down to the 200-day moving average or in that zone. So we've had all this optimism in February and March turn into a lot of pessimism on cyclicals. And we think, and what we've been telling clients for the last couple of weeks, is to start looking for bottoms developing in some of these areas. Now, it's convenient that the regional bank index or ETF was up as strong as it was, and the transport index, the two that we're looking at here today. But they've been themes we've been discussing, and it really does fit that profile of going from excessive optimism to a lot of pessimism. Incrementally, I think what we're seeing is a leveling out in that stair-step fashion of stocks, cyclicals in particular, pulling back to their longer-term uptrends. I think they have another leg up here. They could lead all the way through to the end of the year, for that matter. And on the other side, you see the growth stocks, which have just run, and now they're starting to get a little bit soft and starting to pull back. So this ebb and flow between secular growth and cyclical growth, I think, continues through year end and into 2022. Mm-hmm. I think the advantage is to the cyclicals at this point.
So, Rob, let me get this straight. In terms of your call for yields, it sounds like you're saying yields will likely remain in a range, which sounds actually pretty tight, because you say 138 or so is a logical place for it to sort of rest, upside to about 150 or so. That's a fairly tight range compared to the range that we've seen for this entire year. But so are we going to be in that range? And is a range good enough for areas like financials to actually advance?
I think it is. I think we've unwound all that optimism. And the 10-year, again, in that roughly a 50 to 62% retracement would be a band that I would expect rates to trade over the balance of at least through the end of the quarter and in the beginning of the fourth quarter. But I do think it is enough for regional banks and transports and a lot of the other cyclicals. I think when you look at them from a technical standpoint, they're just getting oversold on a weekly basis, and many of them are bottoming. It's almost, I wouldn't call it textbooks per se, but it's got the right type of profile where I think the risk reward favors those areas looking through and into year end and the beginning of 2021.
Rob, thanks. Nice to see you.
Thank
Rob
you.
Slimer of RBC Wealth Management. Guy, yesterday we were talking about rates. Yesterday I dared to ask you whether this was Goldilocks, if we were entering a Goldilocks period, which I know makes your skin crawl, so I'll ask that to you again. But is Rob right in that remaining in a range could actually be a good thing for the cyclicals?
Sort of What was that thing that you just had a
Hard.
Goldilocks scenario, like best of both worlds, all those things that make me crazy.
Higher, but not too
Great song by
high.
Halen, by the way.
Low, but
You know
not
what? It's
too
not a great
low.
song by. It's not a great song by Van Halen.
But you
no,
digress.
could it be right? Yeah. Listen. I remain in the camp that rates are going significantly higher by the end of the year. I am in the minority. I get it. If Dan were here, he would throw the eyes at me. He would at me on Twitter. He would do the whole thing. Rates stopped today around 136. I think we're headed at least back to 175. I think it's going to be great for banks. I'm not sure what it means for the broader market, though. But how do you play it? Citibank, we've said for a while, every time it trades down to 85% of tangible book, it's a buy. It got down there. I think it goes to 77.5, 78.
Basically, you're not buying what Slimer's selling.
I don't-
in terms of the range. But that's what exactly what he's saying. You're saying that rates are going to go significantly higher, which is not what Slimer just said. Where do you think rates are going?
I think rates are going higher significantly. I'm not sure, but I care a lot more about the move in banks. But Bank of America is about to break out to all-time highs. For all this pain on banks, we actually see coming out of those second quarter numbers, we know that net interest margins are going to be better for third. We know that dividends are up. We know that the credit quality is probably as good as it's been in decades. So I like that trade. I also I suggest to investors to put a screen up there of things like Zoom and Peloton and Galactic and these things that to me are high multiple, basically low yield stocks, because they are acting the inverse of what's happening with some of the industrials and the cyclicals. And I think you have to be careful here. I think a lot of those stocks, and Rob pointed that out, I think some of those charts look very dangerous here.
Yeah. Steve?
So I think the 10-year is more, I've said this, is more, I never thought that rates were going to explode higher, and I think that's due to positioning. So I think that it's not really indicative of what we're seeing as far as inflation, but I think you had a bunch of people that trade in these areas that got short treasuries, and when the taper never happened, they were forced to cover, and that has kept the yields on the 10-year quite a bit lower than they really realistically should be. But to your original question of Guy, this is a sweet spot. If we can get somewhere 1.5% on the 10-year, I think my Trinseo, TSE, my OLN, my WRK, I think they all work. And I also think growth works. So this is Goldilocks, Melissa, to your original premise.
On hump day.
It makes me.
And it's hump day.
Oh, my goodness gracious.
3 months away from Turkey Day.
Can you just end a debate between Tim and I real quick? I know you're going to be able to do this, Mel. Van Halen, David Lee Roth Van Halen or Sammy Hagar? Melissa Lee.
No comment.
Better front man.
I don't want to cause
Better
a rift
voice on
between you
Hagar,
guys
better
deeper than
front
what
man.
it is. I have to go.